It is the Wonder Kid here. I hope you're all having a fantastic day. A warm welcome to this video. Guys, as you saw from the title from this video, I'm going to be explaining to you in depth and fully how the premium and discount concept works, okay? So in this video, I'm going to be explaining what premium and discount is, how do we create it as a tool on TradingView, how do we use it and map it out in swing legs? This is where it can be confusing in terms of where do we exactly map it out to and from. And lastly, how do we use it as a confluence and to stack it as our confluence is when we are framing a trade, okay? So how do we use it essentially when it comes to framing a trade, okay? Before I continue, guys, I want to note two important points. Number one, guys, please feel free to watch this video to all the way to the end. I highly recommend you do that because, again, there might be something that you do know already about premium discount, but I may say it in a certain way that it might resonate with you so that you understand it in a different way, and that can potentially help. But again, anyone that is new to premium and discount, this video should help you tremendously, okay? So guys, please feel free to watch it. I do highly recommend you watch it all the way to the end to get the maximum value out of this video. And number two, guys, I do have a brand new Discord server open. So guys, please feel free to check that out in the description below. Again, I do have my socials there, including Twitter. But again, I've got a brand new Discord. It's free at this moment in time. So guys, please feel free to actually check that out and join, okay? So guys, let's get straight into it. What do we know about premium and discount? Okay, let's start off with the words itself. Premium itself, if we think about the word premium, we're thinking about higher prices typical to or relative to price X, okay? When we're thinking of the word discount, we think of pricing that is lower priced relative to price X, okay? So typically we're thinking premium means higher price, discount means lower price, okay? So when it comes to trading, this concept, how do we use it? Well, ideally, we want to be buying something. In this case, we're trading. So we're buying in a discounted price so that we can sell it at a premium. That is how we make a profit, right? Or vice versa. We want to be shorting when price is in a premium because it's higher priced, and then we can buy it back in a discount. So then we have made profit. Again, like I said, buying in a discount and shorting in the premium. Okay, so guys, the way we're actually going to map this out, okay, on TradingView is using the Fibonacci tool. So guys, if you open up your Fib tool, this is how I've mapped it out. So you can just draw the Fib tool in whatever way you like. I've already got everything set, but my settings currently are like this. So again, we've got 0, 1, and 0.5 highlighted so that this is the equilibrium point or fair value point or whatever you want to call it. Basically, this is the middle. This is where the premium and discount border lies, okay, between premium and discount. So guys, feel free to use this if you'd like to. Now, once you've done that, we can see I've actually drawn discount in blue because, again, you want to be buying in a discount and you want to be shorting in the premium. That's what I've drawn out in red, okay? So again, feel free to set that up as you'd like. Now, when it comes to applying this into the market, okay, how do we apply this? How do we know when price is in a discount? How do we know when price is in a premium? Okay, well, it depends on the market condition and the time frame. Okay, so number one, say for example, we are on a set time frame like the hourly, just as we are over here right now. If the market condition is bullish, okay, again, markets don't always look like this or don't always look this clean, but again, this is just to highlight the concept. If we are in this market condition, okay, we can see we have a low over here, we have a high over here. Okay, how do we know this is in a bullish market condition? Well, we can see that this retracement, as a lot of people like to call it, this retracement is where sell side was being offered, but price did not go down further. So not many sellers came in, or not many sell orders were executed. And then buy side was offered, and you can see a lot of buy orders came in. Okay, so a lot of buying happened. That is why we have pushed up. Now, this is why we're in a bullish market condition, because again, we've got little retracements, little sections where sell side are being offered, okay, versus a lot of buy side being happening, okay. That is why market is pushing up. So again, we are in a bullish market phase. Now we want to look at a swing low to a swing high. Again, I've just drawn this with arrows. We will be looking at the charts in a sec so that we can actually explain it further. We're mapping it from this low to this high. Again, this is the way we'll do it. So if I map my Fib tool, you guys can clearly see that from this low to this high, you can see where premium pricing is and discount is relative to the swing, relative till from when the sell side was being offered to when the buying happened. So again, from here, buy side was offered and we can see the orders coming in. That's why we've got a strong push in the market. And then the high is depicted when sell side is being re-offered, okay? So how does this come into when we're actually looking for a trade? Well, Of course, if we are clearly understanding that price is moving in this bullish scenario, we ideally, on this time frame, that's the key thing, on this time frame, to be buying when price is in the blue area, in discounted, versus buying when price is in a premium. Now, it's important to understand price doesn't always have to pull back down into this, into discount, for you to look for buys. It may just sit up into premium like this and continue its leg, okay? So again, we can always map this out in a different way, but price doesn't always have to come to a discount. What I'm saying is that in this round of buying, we are, if price comes back down here, we're buying in the discount of this price range or dealing range, right? Price is being dealt here. It's being offered to buy side. Again, this is where the buying happened between this price and this price. So relative to the buying that has happened between the low here and to the high here, all that buying that happened has created the swing leg. So in that swing leg, if price comes back down here, we're buying at a discounted price relative to that swing leg, okay? Of course, then we can look to set our take profit up here. If we buy over here, so say for example, I'll put a risk to reward tool, not that one, it's actually should be this one. So if we put a risk to reward tool here, if we're buying down here, for example, then of course we want to sell back in premium. You can look to take profits anywhere here or at the top of the swing leg, okay? Just like that. Okay, so again, that's the concept. Now the same thing happens in a bearish market. If price is coming down, okay, we understand price is bearish, where ultimately buy side's being offered, but not much buying is happening. That's why price hasn't gone up, but sell side is then being offered over here, and that's why price is coming down strongly. Then we can again put our fib tool or premium discount, okay, because we've got all the fib tool to make premium and discount here. A premium and discount array is also another way for it to be called. You can see that if price comes up back up into the red zone, which is the premium, we can look to sell, okay, on this time frame. Again, guys, keep this clear. This is on a time frame. We're looking at price on this time frame. We've mapped out on this time frame. I'm going to explain why this is important in just a second when we actually look at the chart, okay? But again, we're looking at, would be ideally selling when price is in this premium on this time frame. One of the key things now importantly to note is the higher the time frame, the higher the weight it has on the trade, okay? And we're going to go into the charts and I'm going to explain this even further, okay? So guys, I hope you did understand premium and discount from that. Now we're going to go into the more intriguing bits of where and how we are actually going to put it in to the charts, okay? So guys, what can we see here, okay? We can see, for example, we're going to denote the bearish candles here, the bearish candle here, 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 here. This is where sell side was being offered, okay? So say, for example, we say the price came down here, sell side was being offered, buy side was being offered. Sell side, buy side, sell side, buy side, sell side, buy side, okay? That is how we're actually denoting this, okay? So we can say that price, again, on this time frame, on the hourly, we can say if we're mapping a swing, let's choose this low to this high, okay? We can map the premium and discount tool just like that. So we're going to use that high and use this low. So I'm going to drag this across. So you see, we've got a low here and then we've got the high here, okay? And this is an example where price did not come back into discount. On this time frame, if price came back down into the blue before another round of buying happened, then of course we would be looking to buy here. Why? Because again, we've got bullish market conditions, okay? Now again, this is one swing leg on this time frame. You guys can see that's a swing leg. This is another swing leg. This is another swing leg. And this is another swing leg, okay? So how do we know these are swing legs? Someone might look at this and say, well, ultimately, this is a whole swing leg, right? So one can say, okay, well, how do we know that we just don't map it out like this? In fact, it's actually the opposite way around. How do we know we just don't map premium and discount from the swing high over here to the swing low over here? Why is it not like this? Well, the answer is that it is like this, but on a higher time frame. If you imagine that on a higher time frame, this will be all one round of buying. So on a higher time frame, it will be like this, okay? But on this time frame, it is not. Why? Because again, we're seeing where sell side is being offered. If you imagine on the higher time frame, all of this would be a buying, okay? All of this would be a strong push up, okay? But again, on this time frame, it's not. So we're going to give a few more examples in this so that it can be a little bit more clearer to understand. So say, for example, want to pick something a little bit more clearer. Okay, again, we can say here, here's a nice swing leg. We can see what happened here. We've got equal highs here. Price took out equal highs, and you can see this move down. That's a swing. Got high and a low. Okay, some people do like to put it at the bodies. Okay, but I look to put it at the wicks. The reason being is because that is the complete range. Okay, so again, you can see this. So I've mapped it from the swing high to the swing low. You guys can see price came back. It did not come back into a premium. Okay, but it did come back into this fair value gap. Again, this is a concept I'm not going to explain in this video, but again, this is what we're saying. Prices come back, stayed in there before it continued the down move. Okay, now again, once we broke this low over here, this is another swing leg. Okay, you can see what happened here. Look at the candles, guys. You can see you've got a bearish candle, then you've got bullish, and then bearish. We have essentially, we've got sell side being offered, buy side being offered, then sell side. Okay, that's what's happening. Okay, so we can say that this is a swing in itself. So we map from the high to the low. What has happened here? Price has ranged, it's come up into a premium where you could look to be a short seller. You can look to get short, and then price has come down and again taken out the low. Okay, so again, what is happening here? We're saying within this swing leg, we are selling at a premium. But again, the context is the most important. We are within this swing leg, which is denoted on the hourly time frame. Okay, so we can look in this time frame. So we can say, okay, well, we can look to get short when price is in this red zone. Okay, and we got to go down in the lower time frames to see when we have a market structure shift or find something that fits our trade entry criteria to look to go short, as long as we have all our other concepts all aligned with it. Remember, guys, the premium and discount tool, or the concept itself, is used as a confluence on top of many other confluences. Okay, we can't always say, like I've given you two examples earlier, can't say, oh, price is always going to come back to the right zone where we're in the perfect place to actually take a short or take a long. Price doesn't have to do anything, but if it's in that area and we stack confluences, such as, for example, we have a bearish market. Number one, we sweat buy side up here. Number two, we are actually in a fair value gap over here. Okay, we can see prices come up into that. Again, failed to close within it and quickly shot down. All these other confluences we can use to stack upon it. Okay, so guys, we're gonna see if there's any more examples on premium and discount here. So say, for example, let's do this. So this is great. This is a great example because again, this is where it can get confusing. This, we can see that we have buying, selling, and then buying happening again. So you guys can see this is a bearish candle. So one might say, okay, well, we can see that this is the bearish candle and then we have the buying and then we stopped here. So one might say, well, this is the high, this is the low, this is where we put the premium and discount tool. Okay, just like this. Okay, now for me personally, this is not how I would place it. The reason being is because we want to look at what happened to price after. Okay, you guys can see when price came up, price offered sell side, but then it broke the high and offered buy side. Okay, so it's still part of the up move. Okay, and then you can see prices come down. So in this scenario, if we're still looking going up and we've only just broken a high, then we are looking for where we have the aggressive move up. Even if price is still just breaking the high, not aggressively, we can still count that as the whole move. So the high would be from here down to here. So I'm going to draw that out. So like I said, as you can see, we've got the low here below this candle because again, sell side was being offered, so the market went down. And then we had buy side being offered. We can see the aggressive moved up. Sell side was being offered here a little bit, but again, buy side still wants. Again, this is still the swing. We've got the aggressive move down and then the aggressive move up, which is part of the swing. So even though this candle broke this high, it is still part of the overall move. So that isn't something that is important to know. Again, this is the way I use premium and discount. As you can see, what has happened since price has come back down into an order block. Again, I'm not going to go into that too much detail in this video. But again, price has come down into a discount and we can look to buy in this blue range to look to go long. Okay, so again, you can see price came down quite aggressively into this region. And again, we can look to go long. It actually came into this fair value gap. Okay, so this is messed up. So go back again, came into this fair value gap right here. So I'm going to draw this out to make it more clearer for you guys. Came into the gap, that gap, you guys can see the volume, the majority of the volume was held in it or above it. But price ultimately came in a discount and we can look to buy from there, okay? So guys, that's important when it comes to swings, okay? Sometimes we can have this kind of scenario where we've got an aggressive move up and we still break the highs. That is still part of the overall up move as long as we're breaking the highs we're just barely breaking it, still part of the up move. But if we came down like this, sell side was being offered, and we broke the highs aggressively again, then this is considered as a whole new swing, okay? So we'll be mapping the premium and discount just like that from this high of that arrow I've drawn all the way to this low, okay? So again, that's important to know, okay? And that should clear up a lot. Now remember, like I said, how do we use the premium and discount tool when it comes to buying and selling in the market, okay? Now this is where it comes important, when timeframes come very, very important, okay? What do I mean by that? Well, so far we've been looking on the hourly. So if we, for example, let's map out this swing leg here. Okay, you guys can see price did not come up into the premium. However, what is happening beneath? We can potentially see on a lower time frame if we have a market structure shift. Remember guys, as the markets are fractal, we can see that on this time frame, if price is moving like this, what is happening on a lower time frame? Okay, market is moving like this on a lower time frame. It's moving in a fractal way. Okay, so say for example, in fact, I will draw this out on this concept because again, there's not many good examples here to show, but this is what I'll do. Let's say, for example, I'm going to keep this as the red line, so we actually separate this. So let's say the red line is the hourly time frame, and the blue line is a lower time frame, such as the 15-minute. If, for example, on the hourly time frame, we have an example where we've got this high and this low, we can see the red, okay? The red high and the red low, the red arrow high and low, we draw the premium and discount tool, okay? Just like that, okay? So you can see, guys, what has happened with the red line. We can see prices come up with the red line into premium. So I'm just going to draw this a little bit clearer, draw this up here. Prices come up into the premium, okay? Now what has happened here? Well, we are in the premium pricing on the hourly time frame. The blue arrow is the 15-minute time frame. It is a lower time frame. So as we can see, price came down here. This is a swing in itself, okay? This high of the blue candle, of the blue arrow, to this low. So we can draw the premium and discount within that time frame over here. And what can we see here? Again, this is just for demonstration purposes. Price came down, came up. So what have we said now? We can look to get short here. Why? Because prices come up into premium pricing on the hourly time frame, because again, the swings are bearish. And on the 15-minute time frame, where we've got the blue arrow, price has broken market structure down here, and price has now come up into premium in the 15-minute time frame. So we're in the premium of the 1 hour, we're in the premium of the 15-minute. The market is bearish. Again, these are confluences we're stacking for a potential short trade. So I hope that makes it clear, guys. We're using this tool on multiple time frames, whereby we, number one, understand that the higher the time frame, the higher the bearing it has on a potential trade. But also we're using this tool to understand if we are higher priced or lower priced relative to what price is saying in the time frame. Okay, so ladies and gentlemen, I hope that made it clear. Okay, premium and discount, this is how we use the tool. We can use the fib tool to actually denote it, but ultimately we're using it within swing legs. Okay, we're using it within swing legs, and we can use it as a confluence on top of many other confluences to actually form a trade idea. So like I say, we map it within the swings, and we also understand, even in this scenario where we are breaking low just, we can actually still further put this down here. Why can we move this down here? Well, the reason being is because we come down, you can see this aggressive short move, and then we're still just breaking this and just breaking this just, okay? And again, you can see price did come back up into the premium, but again, this is a new leg of buying. So again, it just blasted through. Why did this blast through the premium array? Why did this blast through? Well, because of different confluences that we need to align up. Like I said, this is just a confluence. Keep that in mind. We can also see that sell side was swept down here. So price came down, swept sell side. So even though we've got this swing, we understand that this is a swing on this time frame, the hourly. Again, we're understanding what is happening. We've swept sell side. We can see a bullish aggressive move. And subsequently, we can see that price blew through premium because, again, other confluences are stacking up. Price has taken sell side. It's going to be looking for buy side, okay? And again, I'm not going to go too much into detail into this video on about that. However, I will go into these concepts in other videos, but again, this video was purely for you guys to understand the premium and discount tool, okay? So ladies and gentlemen, I hope you enjoyed this video. Again, please give it a thumbs up if you enjoyed it. I hope it does clarify a few things when it comes to premium and discount, especially when it comes to mapping it out in terms of swings and understanding it's used as a confluence, not as a whole trade idea in itself. And that is very, very key. So ladies and gentlemen, I hope you enjoyed this video. Have a fantastic week ahead. Take care and peace.